Welcome to Forex Daybreak, a daily podcast where we cover 8 Forex pairs and give you our view on the market direction for these pairs. If you are trading Forex market, this is the #1 show to start your trading day. Now, let's begin today's episode.
Good morning everybody and welcome to Forex Daybreak episode 25. In this daily Forex update, I will give you my view on 8 Forex pairs I analyze using Elliott Wave principle. My name is Ville Vainio and today is 10th of September 2015. This podcast is recorded also as video and it is available from the members area at forexdaybreak.com. Show notes for this episode can be found at forexdaybreak.com/25. Now let's get started. And let's go right on to the first pair, which is Euro USD. And yesterday at the start of trading we got a promising decline, and I was thinking that okay, we are now seeing a final decline of this first 5-wave sequence. But then on the US session later we got a strong push upwards all the way to 112.5 levels. The price now is 112.1 and this upwards move made a new short-term high, and I have now labeled it as Minuet Wave 4 peak. So there's a slight change in the wave count, and those of you who are watching the video can see it on this 4-hour chart. I have also put the Fibonacci expansion tool in the chart to project the possible ending point for this 4th wave correction if this is still going higher. So the 100% Fibonacci expansion level is at 112.7. This is the high that I'm expecting this to go if this is still going to move higher. But the larger view is still that I'm expecting a 5th wave decline, and previously I have talked about the 110.15 level, and if we now take the measurement from the peak to the low of the first wave, which is 320 pips, and then we project it onto this new wave count, 320 pips will take quite much lower. This would now bring 109.4. So let's see what is the extent of this last decline if this wave count is correct. But I'm still expecting one more wave down, perhaps even to below 110 levels. But there's a possibility that this wave count is not correct and the recent low is already the low of the 5th wave, and we are now witnessing the larger correction on this pair. I'm still thinking the larger view is bearish, and we have started the larger wave down. So whatever the short-term case is, I'm still long-term bearish on this pair. Key levels on Euro USD are that the 112.7 Fibonacci level is the resistance on the upside, and downside support is this 112.13 level, which we are right now. This is the immediate support. The next support would be the yesterday's low, which is at 111.33. Those levels are the ones to watch in Euro USD. If you have a high risk appetite, perhaps there is a trading opportunity I would first wait a clear signal that this is still going to make a impulsive wave to the downside. So perhaps not just yet enter a trade, enter a short trade here. Wait for a clear 5-wave structure to the downside on a lower time frame charts. Maybe the 30-minute chart would give an indication that the correction to the upside has ended and the last wave down has begun. But there's definitely an opportunity to go short on Euro USD. I won't go short just yet, but I might go later today if there is a signal that the downside has still one more 5-wave structure left. Okay, next dollar yen. Price now 120.34, and the upside momentum yesterday was quite strong. During the night there's been a slight decline. In my opinion, this is just a smaller correction on the way up. And yesterday I made a few pips with this pair. I entered the long trade and then I closed it later, making, I can't remember how much, but maybe 50 pips or something. Key levels on dollar yen 120.7 is the immediate resistance on the upside, and 119.2 is on the downside, the next support level. These are the same figures than yesterday, and I'm expecting more upside here, and there is a trading opportunity to the upside still here, so perhaps this small correction would give a nice trade to the upside. Make your own judgment on this and look at the lower time frame charts for clear indication when there is a good entry point on dollar yen. Next is pound dollar. Yesterday I talked about a good opportunity to trade the C wave here, and it's now looking that we have possibly seen the first 5-wave structure to the upside as wave A, and now the decline is probably the B wave forming now. So when this B wave has completed, I would go long for the C wave of this correction. So on a short time frame chart, maybe in a 30-minute chart, we can look for a first smaller 5-wave structure to the upside, maybe even lower time frame than 30-minute, maybe 15-minute chart. So first 5-wave structure to the upside would give a clear signal that this is still forming an upwards C wave, which will be 5-wave structure, and this has meta resistance at 38.2% Fibonacci level, which is at 154.13. Price now 153.5, and the projected target for the C wave is near the 61.8% Fibonacci retracement level, which is at 155.7. So that should be the target, and if this B wave correction bottoms near the 23.6% level and we would trade this near the 61.8% level, there would be a close to 250 pip move. So quite a good trade if this will go like planned. So let's see first when this B wave is over and then trade this to the upside. Key levels here are the previously mentioned 38.2% Fibonacci retracement level, and 153.3 is the next support on the downside. This is the minute wave 1 low, same levels than yesterday, more or less. There hasn't been much progress since the B wave is more or less sideways motion right now. Okay, euro pound next. This has moved higher and we are back on the sideways range. Still no clear indication on the direction here. This is going back and forth, up and down, and is forming a quite complex fourth wave correction in my wave count. At least this is a fourth wave correction. Yesterday I labeled that the fourth wave correction might have been bottomed, but this recent price action is not looking impulsive, at least at the moment. So let's see how this goes. I wouldn't trade this because there is still uncertainty on the wave count and on the wave labeling, and also the upside is quite limited. There isn't much to trade. Maybe 100-150 pip move would be the maximum that there could be gained here. So I wouldn't trade this. I would wait for this to resolve the range and go higher, finish up this correction, and then we can start to think entering short in euro pound. Key levels are more or less the same than yesterday. The upper part of the range 0.7223 is the support, so the lower part of the range, and the upper part of the range 0.733. Those are the levels, but this whole sideways range is more or less the resistance and support zone. Okay, let's move next to euro yen, and I have put a Fibonacci retracement tool in here to see the extent of this correction. We have moved slightly higher, and there is an upwards bias here. We are right at the 38.2% Fibonacci retracement. Price now 134.96, close to 135. This has stalled on the 135 levels and possibly is now forming a B wave of this second wave correction. And this has been quite steep corrective move. I'm expecting this to be a zigzag correction, so slight decline perhaps next, and then a move higher, and possibly even retracing more than 61.8% of this decline. I wouldn't trade this to the upside. I would wait for this correction to end and then look for a short position when the decline resumes. I'm expecting more downside once the correction has ended, so there should be a good opportunity to go short on this pair. Key levels on euro yen, 135.6 is the next resistance level on the upside, 134.8 is the immediate downside support, 134.96 is now the price, so quite near is this downside resistance. The 23.6% Fibonacci level is at 133.8. Perhaps this will give support if we see a larger decline for the B wave. So look for those levels, make your own judgment if you have the stomach to go long on this correction, but I wouldn't necessarily trade this correction to the upside. Okay, pound yen is next. I made a slight modification on the wave count here, so the recent low is now labeled as minute wave 1. So this whole decline from the peak at around 195 to 180 is wave 1 of minor wave 3, and we are now forming a minute wave 2 correction, and possibly have formed the first phase, the wave A of this correction, and now are declining, maybe forming a B wave and one more push upwards as wave C takes this pair higher to finish up the minute wave 2 correction. Key levels upside 185.87 and on the downside 183.65. There's also a Fibonacci retracement levels on my chart. Those of you on the video can see this, of course, on the 4-hour charts. Those of you who are just listening, I will tell you that 23.6% retracement level is at 183.65 and 38.2 185.86 and 50% 187.67. Those levels are also important to look. This 38.2% level has acted as resistance yesterday when we got the strong peak, and maybe this 23.6% will act as support on the downside. There can be a trade here to the upside once we finish up this B wave to the downside, and then C wave can commence to the upside. So this can be traded and can be a good trade if you get in early. Okay, next is Euro Canadian dollar. A strong move upwards yesterday on the US session, and I have labeled this latest peak as minute wave 4, so slight revision here. Also the latest low is now minute wave 3, and this latest peak is minute wave 4. So I'm expecting one more push to the downside to finish up this 5-way structure, and 148.62 is now the price. Key levels are 150 on the upside, 147 on the downside, so same levels as yesterday on Euro Canadian. And yesterday I entered the trade here which has hit the stop loss level, so perhaps there's a trading opportunity today as well here to go short on this pair. I would look for an opportunity on the low time frame charts, and I will actually later look more closely. Yesterday I maybe was a little too hesitant on the entry, so but of course I was trusting my wave count, and this is what happens if you are wrong. You will get hit on the stop loss. Okay, so maybe there is an opportunity to go short here. There is a downside potential here, maybe 200 pip move, maybe a little less, but still there is a potential for a good trade here, so make your own judgment on that. Okay, finally is US dollar Canadian, and same thing, I entered short yesterday because I was looking for a decline towards the 128.6%, 128.6 level, which is the previous fourth wave low. But this wasn't the case. This has retraced all the way back to the range, the sideways range, and is more or less on the same sideways motion now. Key levels on US dollar Canadian are 131.17 on the downside, next support level, and on the upside the latest high 132.12 is the resistance. And this is looking like a triangle now, so perhaps I will look more closely at this wave count later today, but there is nothing to trade here, I think. Let's just see now the conclusion for this correction, and then we can maybe start looking for better trading opportunities on this pair. That's all for today's episode. Visit the show notes at forexdaybreak.com/25 and leave your comments on that page. And remember that this podcast is recorded also as video, and it is available from the members area at forexdaybreak.com. 2 other features you find there are my Elliott Wave Ninja trading system and my mentoring program. All of these are included in the subscription plan at forexdaybreak.com. I have a 5-day free trial for you to see what's inside. Thanks for listening to my show. Now go make some profits, and I will see you tomorrow. Bye bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.forexdaybreak.com, and tell your friends about us. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.